I would have to click share on that. All right, so we are day 2 of the 4-day FX Kickstarter program. I hope you enjoyed day 1. Day 2, today we'll be talking about the fundamentals, looking at the economics, telling you what to pay attention to, what you don't need to pay attention to. We might get quite technical, we might go into a bit more of the details, but my main aim is really to keep it quite clear, quite simple, quite concise for you. I'm not going to teach you everything about economics. I'm really going to be teaching you things you need to know about economics to start trading, to start making money. Okay, so don't get me wrong, this is not going to be a 4-year economics degree compressed into 3 hours. This is going to be all you need to know about how to read the news, what news to pay attention to, how to get started trading, how to not get caught by any surprises, and how to use good information to start making some good profits. All right? Let's click on that. Okay, so before we really delve deep into the whole economics idea, in theory, trading can be quite simple. You know, they always say sell right at the top, buy at the bottom. It's so easy to make money, but we know that this is not always going to be the case. Market do fluctuate up and down in the short term. You want to know what to, you won't know when it's the top, you won't know when it's exactly the bottom. In theory, it looks like you sell the top, buy the bottom. But in reality, what actually happens is because you don't know what is top and because you don't know what is the bottom, once it approaches the top or once it's coming off the top, you tend to end up getting into trades late. Okay, so in reality, a lot of times you will not be selling at the top. Once it gets to the top, you'll be wondering to sell, you'll be waiting to sell. It starts coming down and you actually end up selling close to the bottom. And as you sell close to the bottom, you might make some money before it turns back up against you. You close out with a loss. You think you're buying at the bottom, you might be buying at the top, and then same thing repeats itself. You might make a little bit of money before it comes back down against you. You close out the buy, you get into a sell again. So this is, in my experience, a problem faced by a lot of retail traders where they intend to sell at the top and buy at the bottom. But what actually happens is they end up selling close to the bottom, buying at the top. And that's one of the primary reasons why a lot of retail traders don't make money. But as we know, who are the ones who make money? It's the institutional traders, it's the banks, it's the professional traders, because what they do is they actually look for the long-term direction, right? They look at what's the long-term direction. Hey, if it's going up, it should be going up. They're looking to buy, and then they'll hold through the fluctuations. They'll hold through the fluctuations to get out at the top or get out at close to the top and get out at their profit targets, because they are ready to hold on to the fluctuations, because they're not looking to buy at the bottom, they're not looking to sell at the top, they're looking at long-term, riding the long-term direction. Okay. However, a lot of retail traders, or most retail traders like yourself, will struggle to do this very successfully because, one, you have limitations in your capital. So you might not be able to hold on for a long period of time to sit through that fluctuations. You go through a lot of emotional roller coaster. You go through, you could be making money, a lot of money on one day, losing it back the next before making more the following day. So this, although is the way that you should be trading and should be making money, is not going to be easy to adapt to as well because of all those limitations. So why I'm putting these two together, what I want to suggest to you, as much as you can, to really employ this idea of thinking, is that you think about it of the long-term direction. You think of where the market is heading in the long term. And then you start looking, if you think that it's going up in the overall direction, you start looking for buying opportunities. buying opportunities, buying opportunities. Don't think of selling. If you think it's going down in the long-term direction, you think selling opportunities, selling opportunities, selling opportunities. Comes with all that support resistance lines, comes with all those other characteristics of trading. But you keep it simple, you keep it consistent with that approach. You look to buy. It could be near the bottom, it could be at the bottom, it could be as it moves up. But you're not looking to buy and sell. You're looking at one trade along that long-term market direction. Okay, so you would see that that approach, that consistent approach will give you a little bit more of a confidence because you see the long-term market directions. And why, another reason why I'm sharing this is, as we talk about economics today, that's one of the drivers that will give you the idea of where the long-term direction is going to be, where the long-term market direction is going to be. If it's good economic numbers over and over and over again, obviously you expect the market to be heading up. If it's bad economic numbers over and over and over again, you'd expect it to be dropping. You'd be looking to sell over and over and over again. Okay, so just wanted to do this quick snapshot to give you an idea of how I approach the market. I find the long-term direction of the markets, and then I look for that trade over and over and over again, rather than trying to get too emotional with how the market moves. Every time it jumps up, I look to buy. Every time it jumps down, I'm looking to sell. Have that consistent approach. Have that slightly emotionalist trading. Have a rationale behind why you're entering the trades. Okay, so this next slide, I'm trying to show you a overview of what we're working through for the next 2 or 3 more days, or today and over the next 2 days. Is I want to try and get you to the point where your trading is going to be almost emotionalist. You're not jumping into a trade based on over trading. You're not jumping into a trade because you want to gamble. You're not jumping into a trade because you have a feeling that it's going up. You're jumping into a trade because you have a step-by-step, a logical reason behind every trading idea. So that if you make money, you know exactly why you're making money. You have those steps. You check off step 1, step 2, step 3, step 4, and step 5, it tells you to buy. If you buy and make money, you know those steps work. If you sell, you know those steps work because the steps told you to buy, but you actually sold. If you enter step 1, 2, 3, 4, 5, and you buy and you lose money, you know where you have gone wrong in those steps. And these are the exact same steps that I have been using for many, many years now. These are exact same steps that I teach my students in person. And these are the exact same steps that hundreds of students have used to very good success. Actually, even if you are joining us from the signals channel, you've seen those signals. These are the same steps that we use to qualify the signals before we send it out to you guys. So that's why you can see the analysis that we go through in the Traders Club, where we go through the 5 steps, answering these 5 questions for every signal that is sent out. It gives you the basis of why the trade is being entered. So today we are going through step 1 and step 5, looking at the fundamentals of the currency, looking at the based on the previous economic news, the data and policy information. Step 5 is understanding upcoming economic news, data or policy release that could impact any trades that you have running. What we will do in the next few sessions will be to look at trend, look at support resistance lines, look at the indicators that I'll be providing to you, then putting it all together and identifying trades, over trades, going through examples of different trades and how you can apply these 5 steps over and over and over again. So one last one before we get straight into the fundamental analysis. I just want to make sure that all of you who are joining us on right now, please do join us on the currency call. I do this every Monday to Friday. That's Monday, Tuesday, Wednesday, Thursday, Friday at 11 a.m. GMT plus 8. So I think the guys will put in the link there for you. That's also free to attend. We do a market analysis, a write-up on the market analysis on Forex Trading Asia. Make sure you have signed up for that, bookmark that. That's also free to join. We have our trade signals on the Telegram channel. Okay, so telling you exactly what trades we're looking at, what trading opportunities are there, trade ideas that you might want to jump into. That's all shared on the Telegram group or Telegram channel, absolutely free as well. And lastly, those of you who are not already on LCMS Traders Club, a private group on Facebook, please make sure you join. It is massively beneficial to your overall trading journey. It is $199 a year to join. Only $199 a year, less than $1 a day. Or I think they've even calculated is 50 cents a day or something like that. All right, so make sure you join. If you take your trading seriously, this is the trading community to join. With that said, are we ready to get started? Put it in the chat. Are you ready to get started? Fantastic. All right.